All right. Good morning, everybody. Today is Wednesday and it's May 1st, May Day, and lots of stuff going on. But I also wanted to say that Jeffrey is unable to join us this morning, so I'm going to be doing the show solo today, which should be maybe interesting, maybe not. You might get tired of hearing me talk, but anyway, the show must go on, as they say, and so totally no big deal. I'm just going to do a nice casual sort of show here and just wing it and look at a few things. And Jeffrey will be joining us next week. So, with that said, let's see. This was the I was looking around at some of the different charts, interesting stuff we can look at today and that type of thing. And this was the first one that struck me. MRCY was one of the trades that got closed yesterday ahead of earnings, and it's always interesting to see how the stocks react to earnings, right? And so, as you can see here, and this chart looked totally different yesterday. Let's see if we can get a. It's always a little tricky here to try and get it right on the day that I want, but there you go. Pretty good looking chart actually ahead of earnings. Triggered back here after a little bit of a sell off and a pivot low. So it was a nice trigger. Actually, I believe it triggered that particular day, but anyhow, had a real nice sort of steady march up, waffled around the target for a while, and then it really took off. Right, it was looking pretty good. So it was actually one of the bigger recent gainers on the list. And so you see something like this, and you think, oh boy, closing it ahead of earnings is sort of the good thing about doing that is that you're locking in that gain, right? And so the bad thing about doing it is if the stock has a big pop, right? Which look at that. Um, so there's different ways of doing it. Quite frankly, if one had locked in a partial gain, say at the target or the parabolic stop, this thing was up enough. But we've seen so many stocks that just tank over earnings, right? I'm trying to think. There's been a couple of them recently that are escaping my mind right now, but we've seen some really big down moves after earnings, which we do every earnings season, so it's crapshoot. I don't recommend holding a stock over earnings unless you have a really good cost basis and it's more of an investment. So we talked about that a lot. One of the things that I wanted to mention, let's see, First Solar. I think that was, yeah, that's when we closed ahead of earnings. Didn't really have much of a move, which was kind of interesting. Off the top of my head, I can't think of the stock that I wanted to use as an example. But anyway, one of the cool things about closing out ahead of earnings is each quarter then it sort of wipes the slate clean, right? I mean, all the pitfalls aside of holding over earnings with the big gaps and the crazy movements and all that, it sort of gives a chance for all the open trades to kind of cycle through and end up getting closed to make room for a whole new batch. The other interesting thing about earnings season is that a lot of times stocks on the pending list that have already come out with earnings will actually trigger in on the earnings release. We have one of those right now, Seagate, which the thing about this is you want to be a little bit selective when it comes to these huge swings right here. So let me look at Seagate. If I'm not mistaken, Seagate triggered at 48.30 was the trigger price. So let's just look at that. 48.30 was the trigger price. Yeah, so this is one of those cases where after that sort of move right there, this gap up this morning probably would not have been one that I would have wanted to just jump right into this morning, right? I mean, you got to use a little bit of discretion. The thing of it is that the system is programmed the way that it is, and it can't really control what the price does, right? And so you have to use a little bit of discretion. And so when I look at the trades that we're triggering for today, this one with this sort of wild price action would probably been a pass. Although, somewhere around this trigger price, if it settles down a little bit, I mean, this could end up, taking off. We see that a lot. Probably not a good example here, but maybe this gap up here. This was probably the prior earnings release. What I was about to say is, when you look through enough charts, you will see a lot of earnings gaps that basically, like, the stock makes a big move on earnings, and at the time it looks extremely dramatic like this, but a couple of months goes by and the stock kind of never looks back, right? A lot of times the earnings release will kick off like a big run higher. So here's one of the ones that triggered yesterday. This one doesn't look too bad. See, trigger price 95.55. So that would be about right down here, 95.55. So here's another case of where the stock closed above the trigger, and then the following day you could get filled at the trigger price or even below it. There's a lot of even though the system itself is completely mechanical and programmed on the back end, and it's going to do what it's going to do. The cool thing about it is that you can use a little bit of your own discretion and play it in different ways. As a matter of fact, there's quite a few ways that I've thought of that one can utilize the system sort of based on their own preferences. And I think I'm going to do a blog post about that because I came up with some interesting ideas. And yeah, it's kind of neat because the system itself kind of takes on a life of its own, as we've talked about, just due to the nature that we've seen all these stocks cycle through here, and it's a rules based system on the back end, but there's different ways that one can actually play it. So here's another one. Here's one. I believe this. I believe this gapped up based on earnings yesterday, and so let's see. The trigger price 32.30. Yeah, this is one that is basically you'd probably want to pass on this. Give it a few days, maybe see if it comes back down, consolidates. Sometimes they just take off after earnings, never look back. Other times, like you get something like this, and then you get a few days where it sort of pulls back. So, over since we've started this, we've had a lot of people ask, how much is too much as far as gapping over the trigger price, and to me, it's a couple of percent, a few percent. It's more sort of about the chart, I suppose. I would say that it's possible that this stock, if you just bought it this morning at the open, it's possible that it could continue up. But to me, this sort of a move here. So this basically triggered in on earnings, right? And so I would give this a little bit of time, see if it fades back down, see if it consolidates, what it acts like. And then of course you can look at the longer term chart. This is kind of a weird one. I mean, it doesn't look that good to me. So, but we'll have to see. There's always a little room for improvement on our system as far as filtering out stocks that trigger in. And this is only our second earnings season, and so being the second earnings season here, I was thinking that we're kind of getting it down to a science now, right? First earnings season was a little tricky because we weren't exactly sure. We knew we wanted to close the stocks ahead of earnings, but we weren't really sure exactly how that was going to work out. And so, oh, I know what I wanted to look at Coke. That's what it was. Yeah, Coke is actually probably one of the better examples of why it's a good idea to close ahead of earnings. Pretty interesting. So this is last earnings season, right? This was an open trade, closed it ahead of earnings, and boy, it tanked. And miraculously, over the past few months, it's recovered practically back to where it was. So it'll be interesting to see what happens this next time that they do release earnings. So as I mentioned a little bit ago, Jeffrey is off today. He's offline this morning, and so I'm doing the show solo here. So I'm just kind of winging it, and you may get tired of hearing me talk, but I thought that I would go ahead and do the show and look at some of the open trades. And there was one thing that I was actually going to cover here that I think's kind of cool. A little bit of a tutorial for using some of the features that are in here. And I thought I would show you this because it's kind of neat and I use this all the time. I don't know if you guys have been using some of these features or not, but here's what I wanted to show you is how to, like, say you got all these pending trades here and you wanted to look at the charts real quickly and easily of all these, or the open trades. This is basically what I do. I take the open trades and I export them into CSV and I paste them right into my Thinkorswim, which I don't have on this computer. I have a dedicated trading computer. But what I want to show you is basically like the same sort of concept here, which is kind of neat, especially for like just eyeballing the charts of say the pending trades. And so basically it works like this, right? You click this CSV button here, and I'm sure most of you probably have Microsoft Excel installed on your computer. Um, these days, Office 365, I believe, is like 99 bucks a year, or something like that, and well worth it, indispensable. And so, if you have Excel, some computers come with Excel free, I guess. I don't know, but anyway, so basically, if you want to, what you got to do is copy all these symbols, right? So you open it up in Excel, copy all the symbols to the clipboard. So there's 62 on the pending list right now, which obviously changes from day to day. But so I'm going to hit Control C and copy these, and I can just close that. And then over here in the service, there's this little arrow button here, right? And this little arrow points to what we call the resources page. I have a little page here where you can pull up a quick chart of any ticker symbol you want to look at, some different things. But we got the symbols from the pending trades on our clipboard, and I have a handy link right here to the paste in symbols page at FinViz. So if you click that, it's just going to open up a new tab. With Apple in here. Years ago, when I bookmarked this and set it up, I just had one stock in there. But so all you got to do is highlight that, and then let me try this. I'll hit paste here, right? I mean, normally I would use the keyboard shortcut Control V, but so I'll just paste in all those ticker symbols, and interestingly enough, it just sort of puts them in there with like a space in between them, which is fine. And basically, click this arrow or just hit enter, and there you go. There is all of the pending trades right here on one nice little sort of market view page. Oh, look, Snap is in there. Oh, that's interesting. Huh. And so there you go. That's how you do it. You can do that with the open trades too. And I happen to have that link that I put a shortcut to. I happen to have this sorted by today's change, and so the stocks that are up the most are going to show up here at the top. Now this is delayed data over here at FinViz. I know they have a real-time option, but quite honestly, nowadays most people get the real-time charts and data at their broker, and so I just use the delayed FinViz, no big deal, but it's kind of neat because you can go right from oops, hit the wrong thing here. You can go right from the pending trades right to this paste in symbols shortcut here and be looking at the charts of all the stocks that were on the pending list, right? You can do the same thing with the open trades. On the open trades, oh, I keep getting my browsers mixed up here. On the open trades, sometimes I'll paste them all into FinViz here and just kind of keep an eye on them. But typically, what I do is I use the exact same technique to paste them into my real-time trading platform at Thinkorswim. The only other step that I do with Thinkorswim is it likes to import from a file, and instead of trying to, since the CSV export there like exports all the different columns in the table, what I do is I just create a little notepad called Open Trades. I just copy and paste the symbols themselves, just the symbols, into a little notepad, and then I use that to actually import into Thinkorswim. And so I do that pretty much now on a daily basis because that's what I'm using to get the earnings dates. Thing about earnings season, it's really super tricky, right? I think I think that today, well, yeah, let me look at this. So we have one open trade, this FIVN, that's going to get closed ahead of earnings today, and so I note that on the homepage, by the way. So on the homepage of the Investing Systems trading service over here, as you'll see, right here, open trades that get closed ahead of earnings. And there's been a couple here and a couple there recently. Even though like it seems like the S&P 500 stocks, there's a big blitz of those coming out with earnings. And then, your average stock, most other stocks seem like they release a little bit later. So I went through last night and I looked at all the open trades that were coming out with earnings, and man, next week, on let's see, I guess 5/6, which is next Monday, there's probably 6 or 8 of them, and so next week's going to be a bonanza of stocks that get closed ahead of earnings. One of the things we mentioned last week when we were talking about closing out these stocks ahead of earnings is that so FIVN is going to release after the bell today, right? Let me verify that, but that's basically how it works is a stock that's going to release earnings today after the bell, we're going to close it using today's open price, right? Which kind of makes sense because, and there'll be certain times, obviously this one, kind of works to our advantage, closing it using the open price, but there'll be other ones that will open and then have a big up day ahead of earnings. But it just sort of makes sense because somewhere, shortly after the open, anybody could go ahead and just sell it. So one of the pitfalls, I mean, there's a couple weird things about selling ahead of earnings, but it is what it is. But one of them is that like there may be some stocks, and I'm sure there are some stocks on this list. I think LPX is going to get closed this coming Monday. Some of them, maybe they haven't done anything. Maybe they're barely up or they're down a little bit or whatever, and they're going to get closed ahead of earnings. Whether they moved or not, and it's just sort of the nature of it. And like I said, that's where it gets sort of tricky over earnings season because we've had a couple recently where we do the update at night and a couple of stocks trigger, and then after I see which one's triggered, I look and see, well, geez, this thing's coming out with earnings, in a couple of days, and so we just delete it off the list. So we've been trying to do that, and like I said, it's a little bit tricky because literally every single company is going to come out with earnings on a quarterly basis, and so we're just basically avoiding the risk that comes with holding a stock over earnings. Now, there may be some weird cases where a stock will trigger in and then like maybe one will trigger in today, and then like next Thursday they're coming out with earnings. So hey, here's the thing: is we've seen a lot of pre-earnings run-ups in the past. We've seen a lot of stocks that maybe 3 or 4 days before earnings. I mean, they can take off and make big moves, and then there's going to be others where the stock just does absolutely nothing. So I would recommend, highly recommend, that when you see a stock that's triggering and you're thinking about, maybe getting into it, that you do a little bit of your own due diligence, do a little bit of your own research, and see when that stock is coming out with earnings, and maybe if it's going to be a week or less than a week or whatever, maybe you just hold off on it. So maybe you decide that it's not worth fooling around with, because like I say, there will be certain cases there, and that's just kind of the nature of earnings season. It's weird. We see these stocks release earnings, and then they're down real big, and then 20 minutes later they're up real big, and then the next day you have absolutely no idea where they're going to open. And so it kind of, the one cool thing about it, like I said, though, it does actually sort of refresh everything, right? And so that's I think that's one of the benefits of it, is that stocks that maybe have been open for a while. I think this CRL is going to get closed too, so we may see a few, like just barely up or down stocks that actually get closed, and that's just sort of a function of the way that we're running the system here. Oh, let's see, something else that I did want to mention was on the calculators page over here. Let me get this calculators page. We added a new one. We added a brand new one, I guess last weekend here, and this kind of rounds everything out. And this is kind of a neat little calculator. What this does is it allows you to calculate an average share price if you make multiple entries into a stock. So, say you bought 50 shares at 26, and you bought 50 shares at average. Say were adding on to a position, right? 50 shares at 28, and then 20 shares at 29.50. And so this, I can see, there's not really, we don't really have anything built into the system where we're going to be doing something like this, but this is pretty handy, right? This can be handy. Now, what I was going to say is the one case where you might see this is what we were talking about last week. Um, say that, let me hit F5 here just to clear this all out. F5 on my keyboard will clear this out. Say that you have a stock that's got a trigger price of $50, right? And so the stock gaps over that, and say you buy, like 20 shares at 51.75, because the stock had gapped over the $50 trigger price, and then you set a limit order to buy another 20 shares at the exact trigger price 50. And so I can see where this would be really useful for that. And so basically what you'd end up with is an average price of 50.88, right? So we talked about that last week. One of the members was using that particular strategy, which there's absolutely nothing wrong with that. Nothing wrong with going in half at a slightly higher price than the trigger, because the trigger price, like Jeffrey always says, just sort of a zone. It's a level that the price needs to penetrate through in order to make a move. And so there's going to be lots of cases where you'll see the price will close above the trigger, and then the next morning it's going to open higher than the trigger. And so there's a couple different strategies that you can use. If you're paying low enough commissions, you could actually split the buy into a couple of positions. I know that he has. We talked about this a little bit last week. Some strategies for actually adding on to a winning position, and so that's where this average share price calculator can come in handy. I'll tell you what, though, this the second one here, the price differential calculator, is the one that I use all. I mean, I use this thing all the time. As a matter of fact, I was looking at the Russell 2000, and interestingly enough, this little sell-off here, this sell-off from 225 to 325, right? It's just a little high up here, and then there's this little low. So yeah, there's a little bit of a dip, right? I was having a conversation with somebody about how the system is going to perform, when there's a sell-off, right? And so I was thinking to myself, well, we had this little string back here from, I guess it was in early March or in March, had this little string of stop outs where it seemed like the market was acting kind of rough, and so basically what I attribute that to is the fact that the Russell 2000 had this sell off. But moral of this is I wanted to figure out how much was this sell off, right? So basically, using the IWM, I took the high 159.50, right? Pop over to my little calculator here, 159.50, and then I took this low right here, which was 148.41, and quickly and easily I can see that we had a 6.9% sell off, which is relatively significant, right? I mean, if the S&P sold off 6.9%, boy, it'd be a bear market on CNBC, right? but yeah, so there was like that little rough patch there. And we've talked about this on the prior shows that the Russell 2000 is more likely to represent just your average random stock, obviously because it's 2,000 different companies as opposed to the Dow 30 or the Nasdaq 100 or S&P 500 even. But interestingly enough, the indexes are really skewed towards a small handful of companies. I mean, I think we talked about this recently too, but I should have actually saved it somewhere. But I believe that like the top four Nasdaq 100 stocks account for like 30% of the index, which is pretty amazing. I mean, basically your Microsoft and Amazon and and Apple, obviously. So anyway, if you just randomly chose a random stock, it's more likely to look something along these lines. I mean, so many stocks that I've looked at, and even things like the financials, right? I mean, everyone's sort of keen on the financials. They've had a big move, but look at this. I mean, the high on the financials was back in January of 2018, and here we are, 4 months, almost 5 months into 2019, and so these things got a ways to go, and there's a ton of stocks out there that are just like that. They're, even though the indexes are at all-time highs, and there's plenty of stocks at all-time highs, but the other funny thing is, like I was talking about having all the ticker symbols pasted into all these different ticker symbols pasted in. So I do that and I watch the open trades, and a lot of times what I notice is that the open trades, even the like right now, right, out of all the open trades, and they span a pretty diverse sectors. It's like basically the open trades are all sorts of different sectors, every single sector there is, and it's interesting to see on my screen that just a handful of them are green right now, and the S&P gapped up, faded down, is still up a couple of points, but the majority of stocks right now, so the breadth is terrible right now, basically. So anyway, this price differential calculator, this is the most handy thing out there, really. I used to have a calculator sitting here on my desk, and this makes it much easier. You buy a stock at 67.35, and and now it's at 69.48, and boom, you just type the numbers in there, calculates the difference between them and the price, and just makes it really easy to calculate percentages. So, and we've covered all these other calculators. There's a video on this page that talks about them. So, the average share price calculator is one that Jeffrey's had around for a while, and so we thought that it would be a nice sort of final addition on there. I know I know somebody mentioned about a calculator for investing the same in like an even amount or whatever. But that's one thing that's just you might as well just pull out the calculator on your desk. Like if you were going to invest $1,000 into five different stocks, you wanted to figure out how many shares to buy or whatever. I mean, it's just one little calculation on your desktop calculator. So yes, we've had a pretty good string of gainers here. Pretty good string of gainers. Now, some of these have gotten closed ahead of earnings. And, what I've noticed is that, and we've talked about this before, but the way that the stocks sort of cycle through the system over time, now that we're in our second earnings season, sort of getting a real good idea of how everything works here. And so it's kind of interesting because I mean I've seen literally every sort of different type of scenario. here's a here's a stock we've looked at the past few weeks, right? Big run up, hits the target, parabolic stops kicked in. I mean this thing was everything was looking great there, and all of a sudden I tried to look at the news to see what caused this sell off yesterday, and I mean, I didn't spend a lot of time with it, but all I could figure was that this is a solar stock, right? And I guess they compete with Solar City, who's part of Tesla now, and I guess they're price cutting or something. I mean, they're doing something, and it caused this stock to just absolutely, tank, gap down and tank. But the funny thing is that the trailing stop, after this big run up here, the trailing stop was practically where the target was, right? And so, you know, having that trailing stop just is basically what the whole system is about, right? And this is a pretty good example. Let's look at one that's open right now. Here we go. This ANF. Yeah, this is. I'm just kind of randomly looking at the open trades and just picking one here, but this ANF's a pretty good example. Triggers in, you got an initial stop sort of down below the right around the pivot low there. And as the stock moves up, and I may or may not have every single trailing stop on this particular one. I know that this one's current because I just put it on here last night. But basically, the idea of the system is that it triggers you in, you put an initial stop in, and the worst case scenario is that it doesn't get any follow through. It rolls over and hits the initial stop. And that does happen, but it's kind of rare. It's kind of rare that the stop doesn't have an opportunity to get ratcheted up, although it does happen. But I would say it's more likely than not, the stop is going to get ratcheted up at least, once or twice if there's a little follow through past the trigger. But the one thing that it even took me a while to get my head around this. But any open trade only gets closed, only moves to the closed trades table when the trailing stop is hit, right? Not when it hits the target or not when it hits if it hits the parabolic stop. But in order for this to, actually get closed, it's going to have to come back down to wherever the trailing stop is. And so even if and so the point is when you're looking at the closed trades, that's something to keep in mind. And it's a kind of it just kind of takes getting used to. I know, you guys that are watching the show have a pretty good idea of how everything works now, but someone new that comes in, it takes them a little while to sort of get the idea that we're not closing them at the target because stock can make a huge move past the target, right? There's been lots of cases where the stock goes through the target and never looks back, and so the target is sort of designed as it's calculated to be a place where you could theoretically just sell the whole thing at the target, move on to the next one. That's one way to play it. Another way is that you could sell half at the target, or you could sort of and then hold on to the rest using the trailing stop. And it's sort of the same thing with the parabolic stops too. When the parabolic stops kick in, sometimes they kick in below the target. Sometimes they will kick in, after the target. As a matter of fact, on this ANF, there's a new parabolic stop up here at 29.45 that I don't have marked on my chart, and so this one never actually got tagged, right? Stock made a pretty good move there. I had a long range day, and that day that it hit the target, you could have just said, okay, well, I'm going to slide my stop up to the parabolic stop rather than sell at the target, and you just stayed with it. So there's lots of the cool thing about this is that there's lots of different ways that you can actually play it in reality. And so, there's a little degree of I'm gonna I hate to say subjectivity, but I'm gonna call it preference. And that's something else that I want to do a blog post about is some of the different things. I had one of the members, I don't know if you're listening or not, email me and say that they really liked the way the system was designed because they didn't have a lot of time to spend. Didn't have a lot of time to spend on it, and so other people sitting in front of their screens all day watching a whole bunch of stocks, and it's maybe a little sort of a slow going type of thing for someone like that, but it can be part of other things that you're doing if you're day trading or whatever, or maybe managing a swing trading portfolio. But basically, you can sort of adapt our system to, or I would say you, but anyone can adapt sort of what we're doing here to their lifestyle and how much time they have to spend fooling around with the market and trading, right? So the simplest way to do it is just follow the system trailing stop on a stock. And see, I got another one here. Yeah, here's another good one. This is actually a great example because this is what it's designed to do. This is what the system is designed to do. And check this out. Interestingly enough, this is the second go round for this same stock, right? Like over here, caught it on sort of on the way up, and then it had a down cycle and hit hit the stop like on this big long range down, had another down cycle, and then caught it right at the beginning. Actually, the second cycle, the most recent one. This is still an open trade, by the way. Is actually a little bit was actually a little bit smoother and nicer than this last one, and so there you go. I mean, that's sort of the idea there. Catch it right after the turn, the stock goes up, the stops get moved up. There was likely that there was a few stops that I don't have on here. Sometimes when I'm drawing these stops on the chart, there might like this one might have been 55.45, and then there might have been one, so slightly higher. Sometimes I just skip them, but it gives you the same idea. I've seen others where literally on a daily basis you're ratcheting the thing up, 25, 30, 40 cents or whatever. And so, some of them it makes sense to for me to follow them up with each stop, and some of them it's just too much. So I basically wait for some distance, but you sort of get the idea here. And so this is the idea, right? The idea is that as long as the stock has upward momentum, then the stop is going to follow it up, and then they get really tight too. That's the other thing I've noticed is that a lot of times, that stop will get so, like this particular one has had enough time now, and the stop is actually sort of a function of price and time. Those of you that have been following this for a while may have noticed that sometimes it seems like the stop should be doing something, but it's not. And typically that means that it's a function of time, right? So that's kind of interesting. But anyhow, so there's lots of different scenarios that can play out. Here's an interesting one. It's been through the system a couple of times. Just want to look at. I'm looking at the open trades here. Here's one. This Yex. This just got opened on. This just got opened the other day on 429. So let's see the trigger price 2080. So this is a case where it kind of popped above the trigger, closed above it. So in theory, and we're seeing a lot of this. I think that it's kind of a lot of this is due to the nature of just the market right now. The market's kind of schizophrenic. I mean, the S&P just seems to be in its own little world, the actual indexes, and meanwhile, individual stocks are just like, and it's probably a function of earnings season, but individual stocks are pretty volatile, right? So, thing about something like this is that even though the trigger, down here at 2080, I should probably go ahead and mark that on here. Even though the trigger's down here at 2080, and it has this close up here, right? Like say, and here's another handy thing for the calculators, right? Trigger 2080, and then the next day's open is 2149. And so if I wanted to see what that difference was, I pop over here and say, okay, 2080 was the trigger price, and the stock's opening at 2149. What am I looking at here? And so that's kind of pushing the envelope, 3.3%. But what I was about to say is that, look over here, right? There's a couple of spots on this last sort of move up here where you could have had the exact same thing happen, right? Like maybe this day right here, the stock triggered and then it had this move up, but it never looked back, right? And so that's something to consider. And then you'll get cases like this. Now this honestly, it doesn't look like this would have been, a trigger up there just because of the pattern. The pattern is typically, a decent, reasonable sort of pullback, kind of like that. It's got to have enough of a pullback and in order for it to set up for another cycle up. So anyway, my point here is that, on a stock like this, maybe 3% is not really that much, right? So you got some pretty nice things going on here. Now, one of the things I was going to recommend is that you look at a stock on the chart and sort of analyze, what it looks like, eyeball the chart and see if it makes sense. Like this one to me kind of makes sense that okay, even though the trigger was at 2080, this looks like it's got some decent potential, right? Now don't take my word for it because I think I said the same thing about Momo last week, and look what happened here. This is interesting because just this is not an earnings move. Just out of the blue, they had some bad news come out, right? So, and that's that happens. That's part of the idea of having multiple open positions and having small position sizes so that any one sort of full stop out. I mean, basically this is a full stop out and then some, but just things like that happen, right? This was actually a really nice setup, perfect setup, everything about it. And then all of a sudden, I see the other day that it has this huge gap down, and I looked at the news and it said something like it said something to the effect of one of their apps got pulled from some app store. It's a Chinese company anyway, but they just had like some weird bad news out of the blue. So that's going to happen. And so it's not a bad idea to actually have, I'm gonna say, I'm gonna say 3 to 6 positions is probably a good happy medium. I'll tell you though, having more positions will give you a lot of activity, and I think that maybe 10 positions would obviously be the max. That'd be a lot of work. Managing 10 open positions would be an extraordinary amount of effort, but totally doable, right? I mean, the hardest part, and there's ways of doing this, but the hardest part is actually managing the stops from day to day. So, because the stops will change almost on a daily basis, especially on these stocks that if you sort the by percent gain on the open trades here, these stocks that are up significantly, and we've had a few of the big winners get closed here recently, right? Yeah, some just recently here, like these couple here, Sunrun, MRCY, Microchip, MCHP. We looked at that last week. A few of these other ones were like sort of the big gainers, and they're getting closed based on earnings season. But let's look at that MCHP. That was um, that was one that I managed to. Yeah, this one's kind of interesting. Okay, yeah, this was I think the one of the ones I wanted to look at as an example because I would have thought that this was going to get closed ahead of earnings, but this one actually came down and tagged that stop on a sort of an intraday basis and kept going up there. So, but you can see this is a really good example of how the stop trails up, and made it well past the target. Couple of parabolic stops kicked in. So this parabolic stop, if you're pulling some off, I'm gonna say that using the parabolic stop and the target to take profits and or partial positions is probably one of the best ways to go if you're into like sort of short term moving in and out of them. If you're more hands off and maybe you're only fooling around with this for 15 minutes or something in the evenings, then using the trailing stop is the simplest way to do it. But it's really just a matter of how hands on you want to be, right? So using the parabolic stops is going to get you out a lot quicker, and then it goes back to position sizing too. Whether you're using sort of an all or none strategy, um, you could use an all or none strategy using the target or the parabolic stops, right? It's like basically you take one entry somewhere around the trigger price, right? Maybe this is one that actually little bit above the trigger price, never actually touched the trigger price, but if you just followed the standard sort of get in around the open as long the next day as long as it's over the trigger price, then this one's kind of strange. It's a little deceiving because it just ran right to the target so quick. Of course, it would look a little bit different if you cut off that price action. I mean, that target was and the target's also calculated from the trigger too, and so there's a little bit of a fudge factor there because since you didn't buy at the trigger price, that target's calculated off the trigger. If you pay a little bit higher price, then it would be up to you, but I'm going to suggest that, and I had somebody ask me about this too, asking me about, okay, if they paid a different price than the trigger price, should how should they take that into account as far as like the stops and targets? And I say just stick to the calculations there, and even though you got in a little bit higher, and so if you just stick to the what it shows in the table there over the longer term series, you'll be fine. So, yeah, but this is sort of an interesting one because it came down and so here's the thing: is like you don't sweat the small stuff necessarily because basically when you close a trade, you could have closed this out at the parabolic stop at 97.05 this day, or you could have said, okay, well I'm just going to use the trailing stop, and you'd have got out, a buck and a half less the following day, right? You know, and I've seen every single sort of case come through the system. Like, you know, this is just one of those ones where you got like knocked out, and then here, you know, it just turns right around and takes off. And so, but you can't worry about that. You just got to keep plugging away at it, and basically it frees you up. It frees you up to like move on to the next trade, which is kind of cool. I'll be honest with you. So, um, let's see. There was something else I wanted to talk about, and oh, I know what it was. Check it out. So you guys, if you go to if you go to a regular website, if you go to the blog over here, right? If you go to the blog, check out this post that I did over here. It was weekend before last. This is real. This is really neat, right? Three trading rules from a book written in 1949. So, and obviously you can read the post, but here's the gist of it, right? Is this W.D. Gann guy, who I'm sure all of you have heard of, wrote a book in 1949 called 45 Years in Wall Street, and it's actually kind of interesting, right? And so somewhere I stumbled across like a picture of this little blurb here about stop loss orders, and I was like, oh, that's pretty interesting. You know, this is very consistent with, you know, nowadays you'll hear people that say, oh, you can't use stop loss orders, or you know, stops don't work anymore in this market and this and that. The algos will hunt for your stops, but from an individual investor point of view, and you know, as much as we've talked about this in the past, I mean, you have to use stops, right? I mean, you could have bought stocks 20, you know, blue chip stocks 20 years ago, not use a stop and still be holding them, and you know. But so anyway, long story short, I found this little blurb in there that you can read at your convenience on the blog, and so when I was searching to find where this came from, see, I thought it was from reminiscence of a stock operator, Jesse Livermore, but it wasn't. It was from this Gann book. And so I'm searching through there, and the first thing's about stop loss orders. Yeah, yeah. But then we get down to the next one about protecting your profits, right? And this is when he talks about trailing a stop loss, you know. And he obviously talks about it in a simple sort of manner. When a stock's moved 3 points in your favor, place a stop order where you be even if it's caught. So he's talking about moving it to break even, right? And that's his little strategy here. You know, if it shows 4 to 5 points, then move your stop order up to where you have no loss should the market reverse. And so his little his little tip here is about, you know, getting your stop to break even and then sliding it up, right? And so again, like totally consistent with what we're doing here in our little swing trading strategy. And then this last one here is about, diversification, dividing your capital into 10 equal parts, never risking more than 1/10 of your capital on any one trade, this type of thing. Always find new opportunities to make profits. And so, trade in a way that you will not be disturbed mentally by a loss. And so, like in this one little paragraph here, he addresses diversification, position sizing, and risk management. And in that last sentence there's like, trading psychology, right? Like, you're not tossing and turning at night because you got too much capital riding on one particular stock. So anyway, check out this blog post. It's just really, it was fascinating to find this old book written in 1949, and these little interesting sort of like principles that he wrote. And the last thing that I have here on this blog post is his 24 trading rules, which are kind of interesting. So you can pop over here and read this. Yeah, so on the actual, I decided that having stuff like this rather than inside the members area would be is sort of more attuned to a blog, right? So anybody can come by and read this, and so this is really sort of a cool thing, though. Even if you're already a member of this, it's really interesting. It just basically sort of reinforces the idea that this little system that Jeffrey and I have put together is based on really sound principles, right? And the funny thing is that it was sort of after the fact that I figured out that this book right here was completely consistent with what we're doing. And so that was sort of an eye opener, and I noodled on it for a while, and then I decided to write that blog post about it. So pop over there and check that out. So I'm going to go ahead and wrap this up. Sorry I had to do a solo show today, but I know it wasn't nearly as interesting as having Jeffrey on with me. But I decided that even though he had a prior engagement, that the show must go on. So I figured I would go ahead and wing it myself. Jumped around a little bit and that type of thing. But if you guys ever have any questions, well, feel free to shoot me an email. And we will see you on the show next week. Thanks for tuning in.